A few years ago, a friend asked me a question that almost everyone asks at some point. He said, "I want to start investing, but where do I even begin?" One video was telling him to buy crypto before it's too late. Another promised freedom through Forex trading. Then there were people quietly talking about stocks and index funds, which honestly seemed boring compared to everything else. The problem is that the internet doesn't give us clarity. It gives us thousands of opportunities at the same time. And when every opportunity comes with stories of people getting rich, it's easy to feel like you're already behind. But maybe the question isn't which market makes the most money. Maybe it's which one teaches you the right skills first. Most people chase returns before they understand risk. They want excitement before they build knowledge. That's usually where expensive mistakes begin. Let's start with stocks. When you buy a stock, you're buying a tiny piece of a real business. Companies sell products, hire people, and try to grow over time. Stocks teach one of the most important money lessons: patience. The market doesn't reward people for checking prices every hour. It rewards people who can think in years instead of days. That's harder than it sounds because our brains want quick results. We want proof that we're making progress right now. But wealth often grows quietly and slowly. Then there's crypto. Crypto is exciting because everything moves faster. Prices can rise dramatically and then fall just as quickly. It teaches a different lesson: uncertainty. Many people enter crypto looking for freedom, but end up checking prices all day. Their mood rises and falls with the market. At that point, the investment isn't creating peace of mind, it's creating stress. That doesn't mean crypto is bad. It simply means you need a strong understanding of risk before stepping into something so volatile. And then we have Forex. Forex attracts people because the idea sounds incredible: making money from a laptop anywhere in the world. But Forex is usually less about investing and more about trading. Trading is difficult because it demands emotional control. Imagine watching a trade move against you while real money is on the line. Suddenly, fear and greed become much stronger than logic. The hardest part of Forex isn't reading charts. It's controlling your own behavior under pressure. So which one should you learn first? I think the answer is stocks. Not because they're guaranteed to make you rich, and not because they're the most exciting. It's because they teach the foundations. You learn how businesses work, why diversification matters, and why consistency often beats intensity. Once you understand those lessons, crypto starts making more sense because you understand risk better. And if you eventually become interested in Forex, you'll approach it with more realistic expectations. Think of it like building a house. Stocks are the foundation. Crypto is another room you can add later. Forex is a specialized room that requires different tools and skills. But if you try building the roof before the foundation, things become unstable very quickly. The truth is that financial confidence doesn't come from knowing a little about everything. It comes from understanding one thing deeply enough that you stop feeling lost. You don't need to master every market. You don't need to chase every new opportunity. You simply need to build knowledge one layer at a time. 5 years from now, the headlines will be different. There will be new trends, new investments, and new promises of easy money. But the person who understands patience, risk, and behavior will probably be in a much better position than the person who chased every exciting idea. Because investing isn't really about choosing between stocks, crypto, or Forex. It's about learning how money works and learning how you work. And that's a skill that keeps paying off long after the trends have changed.